exactly at the hour mark.
Cool. We can dive into things. So I'll just say thanks everyone for joining. This one will be recorded like every other week. Our guest this week we have on outside of Marty, Tempest from Smilee Finance be joining us. Say hello.
Hi everyone. Ciao.
And for most of our listeners, they're pretty familiar with Marty and with us at Premia. Do you want to give a brief intro kind of on yourself and what Smilee Finance is?
Yeah, absolutely. So first of all, I come from TradFi, so I've got TradFi experience as an option trader for 8 years at market maker and a large international bank. So basically, Smilee Finance comes out from what was my experience with DeFi combined with my experience with TradFi and options. So Smilee is a platform to create derivatives on chain. And the really cool way, the really cool thing about Smilee is the way we do it, because we basically mint them out of LP tokens or like DEX positions, basically. The problem with DeFi is that basically everybody is losing money when the market goes down. If you're a liquidity provider, you basically, like a lot of them lost a lot of their money in their last bear market because they're exposed to impermanent loss. And this means they are actually option sellers. So when you provide liquidity into a DEX like Uniswap, you are selling options, you are selling volatility. It's just that you don't realize that, but you are doing that. So what we realize is if these people are selling volatility, we can actually make some people buy volatility out of them. So in our model, these liquidity providers, they can provide liquidity, they get the same payoff as Uniswap if they provide liquidity on Smilee. And what we do is we use their liquidity to mint derivatives. And the first derivative we decided to launch is impermanent gain. So it's just a plain, simple way to short impermanent loss with a really big leverage. So we launched testnet this week, and you can actually go there on Arbitrum go early. Actually, it's just for some whitelisted wallets, 500 whitelisted wallets for now, but people can basically go there, spend a small amount of premium, and they short a huge amount of impermanent loss with a leverage of 500 times or 1,000 times.
That sounds interesting. And that's on Arbitrum?
Arbitrum go early, so Arbitrum testnet for now. But of course, we plan on launching on Arbitrum within probably 6 to 8 weeks.
And that's just going to be the full launch. Any address can log on.
Yeah, absolutely. Yeah, it's going to be an open launch. So we're going to launch some vaults that are going to be capped. Probably you have like a limited amount of time if you want to participate as a liquidity provider. And then we will basically launch these derivatives on Arbitrum that you can buy every week. So every week you pay a small premium if you want. You can choose any token. We're going to have a lot of different tokens listed. For now, in our trading competitions, we don't just have Ethereum and Bitcoin. We have really fancy tokens like Joe for Trader Joe, or GMX, or Grail, or New Order, Y2K. Like all these smaller tokens are listed on Smilee, and it's really easy to basically buy impermanent gain, that is basically shorting impermanent loss, even on these very small and volatile tokens.
How does the
Can I get a whitelist?
how does the payoff profile compare to that of like a call or a put option?
Yeah, absolutely. So if you are a liquidity provider on Smilee, you can choose basically the token that you want to provide liquidity in, and your payoff is going to be exactly the same as Uniswap. So basically, you are long delta. So if the token goes up, you do make money, but you are also exposed to the impermanent loss the exact same way as Uniswap. And I mean, the good thing about Smilee versus Uniswap is that you know in advance how much, like what APY you're gonna get, because your liquidity is not used for people to trade the spot market as in Uniswap. Your liquidity is used to mint options. And once people pay this premium to mint these options, you know basically how much you're gonna get. So you have a stable APY for that
So it's
week. So we provide
very similar to Panoptic, right?
Yeah, so I mean, one big difference with Panoptic, I would say, even though, yes, I agree with you, it's kind of the most similar product out there to Smilee. But I think the main difference with Panoptic is that in Panoptic, you mint perpetual options. So you actually mint options that don't have an expiry. And this is because they actually use Uniswap LP tokens to mint those options. So what they're saying is a Uniswap LP token is just an option. So this is basically the same original idea that we started from, but they're taking it in a completely different direction because basically people can buy perpetual options on the other side, while in our case, people can buy standard options. So options with an expiry. Their options don't expire, our options do expire because the products are built in a completely different way. And what we think is that perpetual options are yet to be proven. I mean, they don't exist in TradFi. And as a trader, I actually find it really scary to buy an option that doesn't expire. So I don't know in advance how much I'm going to pay. So the good thing about options is that you do know in advance, well, I'm just going to pay this $20. And then if ETH price goes up like 20%, I'm going to make X because I have a huge leverage, especially for out of the money options. If you buy a perpetual option, let's say I buy a 2000 perpetual call option on ETH, then if ETH goes up, I mean, I don't even know if I'm making money because I'm paying more in funding rate for this option the closer I get to the strike, and depending on how many times I cross the strike. So it's very path dependent. It's really complicated for the people buying it. So it's a really cool theoretical concept. I think their white paper is actually one of the best white papers out there in DeFi at the moment. But what I'm worrying is that their product doesn't really have people basically. I mean, traders are just not familiar with their products.
It's more than that.
So what we wanted
in my
to
opinion.
do,
I mean, I totally agree with you. Like the perpetual options are just a product that nobody in DeFi specifically is familiar with, or in TradFi, you know, for that matter. There's just not that many correlatives and not that many people trading those correlative products. I think that.
Well, it's in, you know, Froggy, in a lot of ways, it's basically just a 1.5 day option. I think it boils down
There's
to,
like
if you had to find the most like basic example, it's trade characteristics. And Greeks really model basically a
perpetually
1.5 day
renewing
option,
though,
which
right?
generally are not
And
really
you're
desirable.
constantly paying a funding rate to
Yeah.
renew it. So yeah, I totally get what you're saying, but I think the bigger problem, honestly, with Panoptic is not so much the product; it's the lack of demand. Like there's no product market fit. I think the main reason for that is like it's just too difficult for an LP to put in the position and then wait for somebody to potentially take the other side of the trade, which isn't happening most of the time. And so like what they're expecting, you know, to sell a call option or short a call option isn't happening most of the time. And so they just have idle capital. Do you fear, you know, something similar happening at Tempest?
yes. Yeah, so absolutely. I think this this problem is definitely there. So one of the big limits, I think, of all option protocols, pretty much, is that in options you always need a seller if you want to have a buyer. So this there is this. I mean, a lot of people might want to buy options in DeFi, especially on crypto assets, because crypto assets are volatile. So buying options is quite appealing. But of course, it's really hard to find people who want to sell options. because when you sell an option, you actually have a potentially infinite downside, especially if you sell a call option. So yeah, I mean, the way we approach this. So, for example, Panoptic does have this problem. You need to have someone providing liquidity in that specific range in order to have someone basically minting an option that is a perpetual option with that strike. So what we do at Smilee is to simplify that, and we're like, we don't need to have option sellers. We can have option buyers on one side and just have liquidity providers on the other side that are full range, because a full range liquidity position like UniV2, but it could be any DEX, actually is a portfolio of options. So we can break it down into different options and we can sell those options, or we can recombine those options into more complicated products, but without basically having all of that complexity being filtered down to the people providing liquidity. They actually get Uniswap payoff. They don't need to worry about anything. They just get a more stable APY, an APY in USDC or a stable coin on their liquidity. And on the other side, you can have products that are more complicated. You can have impermanent gain, you can have plain vanilla options, variance swaps, you can have insurance. You can basically build anything on top of that by just combining these options that are being sold by liquidity providers. So this is basically the idea behind.
So you're using Uniswap v3, but you're using full range positions?
So actually, we built it in a fully synthetic way. So what you do is you deposit stablecoin into Smilee. So you don't even need to create, for example, your UniV3 position or UniV2 position. You just deposit stablecoin, and you choose which token do I want to have, basically which liquidity pool do I want to put money in, but you just put in USDC. And then basically that liquidity is used to mint derivatives on the other side. So the payout is going back to these liquidity providers in their base token. So we don't actually use Uniswap V2 or V3 positions. We only use Uniswap V3 to do swaps, because we actually need to do some swaps in order to basically make sure that the payoff of all the options we sell exactly matches the impermanent loss that liquidity providers expect.
Mm-hmm. So the main use for the product is impermanent gain protection for LPs. And the hope is that because you can sell one-to-one payoffs of call options in the form of impermanent gain, people will buy the other side of that to kind of trade the volatility.
Yeah, so you can, of course, use Smilee to hedge if you are a liquidity provider. So let's say there is a Fed meeting this week. It was actually the case, of course, but you're worried that you will get a huge impermanent loss on your liquidity position. Then what you can do is just go to Smilee and buy impermanent gain for this week. And by just paying, let's say, $20, you cover $10,000 worth of impermanent loss. So it's a very cheap hedge in this sense, because it protects a huge amount of capital with a small premium. But I mean, that's one use case, because of course, impermanent gain is also a tool that you can use to bet on volatility. So if you think a particular token is going to be very volatile this week, what you can do is buy impermanent gain. And I want to give an example here. We launched the Joe impermanent gain, so on Trader Joe token last week. So people basically put some money in, then we had a big rally in the Joe token, and these guys basically 10x their money on their impermanent gain thanks to this huge leverage that you have on this product. So the payoff of impermanent gain is basically just the reverse payoff of impermanent loss.
And now
so this means that actually if the token goes up 2x or 3x, and sometimes this does happen on the smaller tokens, you get a huge impermanent gain, because people providing liquidity actually get this huge impermanent loss.
Sure.
Of course, if the token goes up, they're still happy because they're long the token. But
How
this is basically the power of
how
Smilee.
are premiums and payoffs calculated? Seems like that's where the this differs from a traditional option product.
Well, so in terms of the payoff is calculated at the expiry. So when the product expires, we read basically the underlying price. We do a swap at that price if we need to do it to rebalance the position, and we pay out basically the exact payoff of the impermanent gain buyer to the buyer. So if the impermanent gain is in the money, and it's basically always in the money unless basically the token didn't move at all. Basically, so we pay out this payoff to the liquidity provider, and we subtract it basically from the liquidity provider. So we pay it to the impermanent gain buyer, and we subtract it to the liquidity provider. In terms of how the premium is calculated, at the moment, what we are doing is to calculate the fair premium off chain and then launch impermanent gain at that fair premium every week. Actually, every day we launch a new vault, but this is a weekly expiry impermanent gain. But
Wait,
of
you're
course, this is not
centralizing prices?
ideal to do the. So we are, but because this is basically a beta, so we are basically in testnet. We want to basically get out the simplest product out there.
I'll warn
So
you.
we do calculate the prices.
Dopex and Hedgic both launched saying the same thing. Hedgic has been in production for now, what, 3 years? They're still using centralized prices. Dopex, what, a year and a half? Same thing. So I would suggest you move off of those ASAP because it's the hardest part of actually solving options on chain. And until, we have decentralized pricing from multiple venues, I think we're going to have people start taking advantage of those centralized pricing venues, which seems to be like a vulnerability for protocols. So I would suggest for all protocols to move to decentralized as soon as possible because, it just doesn't make sense to stay centralized in a decentralized industry.
That is absolutely true. It is on our roadmap. It's just not the thing that we are focusing at the moment, but it's definitely the next step. So of course, pricing on chain is very hard. So I think I agree with you. It's the hardest part of building options on chain. It's one of the biggest problems, and a lot of different protocols are trying to come up with solutions in different ways. We have Lyra, we have you guys, we have Risk. So a lot of protocols are coming up with smart ways to price, to do the whole pricing on the blockchain, but it's really hard. So the thing is, this is not the only hard problem that we need to tackle if we want to have fully decentralized options working in DeFi. The other big issue is liquidity, the one that I mentioned earlier. So the thing is, the fact that you need to have option sellers in order to have a buyer. So this second problem is the problem we're focusing on at Smilee. But just because like a lot of very, very smart people are focusing on the first, so within like probably a reasonably short amount of time, we're gonna get overall better as an industry in pricing these options, and we're gonna find what the right standard is. So yeah, I mean, there are way too many problems to solve. I just mentioned two of the biggest ones. We want to focus on this second one and not necessarily the first one right from the start. Otherwise, it's just too hard to make everything work at the same
Very
time.
cool. Yeah, I agree with what you're saying. Premia has done similar things in the past. We started with our V1, which had, peer-to-peer options market, and then kind of just iterated from there directly based on our feedback from our community. So we moved to our AMM with decentralized pricing, and now we're moving to our V3, which includes elements from V1 and V2 and elements that have been asked by our wider community. So I do think that's the right way to go. And I think you guys are building a cool product. So I would encourage you to keep it up.
Tempest, I got one quick question for you, and it's not a grilling question like Froggy. What kind of fees are you guys charging currently or expected to charge?
Yeah, so at the moment we're not charging any fees. We are on testnet, so it doesn't really make sense. But probably in our very first launch, I mean, we still need to decide whether to charge fees right from the start or like run with no fees for a period of time. But yeah, basically there is going to be a flat fee on every option that is minted. There is going to be a percentage of the APY for liquidity providers that gets charged to these liquidity providers. And then on some DVPs, on some decentralized volatility products that we are launching, it might make sense to also include a success fee. So especially for the highly leveraged products, it might make sense for some of these to, like if things go really, really well, to get some of that payout as well.
Cool, got it. I guess you guys want to go into the next segment. Thank you for joining, Tempest, and if I can get a whitelist, that would be cool. It would be great to test out the product and let you know what I think and as a user.
Absolutely, we will whitelist you. You can just DM me your wallet or write on Telegram, and we'll whitelist you and give you some testnet tokens as well. And of course, for all guys coming in today to the space, stay tuned to Smilee's Twitter, because I mean, the testnet competition is already live, but we're gonna have a phase 2 with a lot of really cool rewards. So just stay tuned, because we're gonna give out some whitelists for this phase 2.
And Tempest personally told me
Sweet.
that there's going to be an airdrop to all Premia founders. So I very much appreciate that. It's very, very kind of you. No, I made that up. I'm just kidding. I'm just kidding. Don't take it seriously.
On the
I'm
macro
now a
stuff.
Premia founder.
I meant all Premia members. The entire Premia community is what he actually said.
Community members. Yeah. What do you guys think about this FOMC? I mean, you had a bunch of, you always get the Darth Maul, right? You always get the whiplash every time. But this time you had a lot of institutional buyers buying some crazy stuff. There was low 8-figure buys in the beginning of the week through Genesis that I heard of. And then just today, some guy was buying 200 mil spot. And, these guys got absolutely flushed. And it seems like these guys always buy the top and Pico top, and they're never hedged for some reason. And they always go into this FOMC, CPI. I mean, we're up 35% on the week or something, and people are still giga bullish. Is this the bology, rubbing off?
Yeah, it's the same thing.
What do
It's the
you
same
guys
thing
think?
as the Luna bet, right? In like March, what was it, 2022? Maybe I have the month wrong. Where Do Kwon was saying he's gonna put a ton of money into Bitcoin and then use that to back Terra. So everyone's like, oh, this is gonna pump Bitcoin. Let's pile into Bitcoin. And then Bitcoin has a mega dump as Luna crashes. So I think like there's always these narratives that funnel people in at the top, and it's always the same people that pile in. But people never learn from the FOMC or from the Fed, which is basically like whichever way the market is leaning the day before FOMC, sorry, they're just gonna go the opposite way. They almost always just like, since for the past like year, just like try to dampen any volatility in the market. So if the market's getting like super excited about like going long, then they're gonna put out some like rate hike news that's gonna cause people to get bullish or bearish. Or if people are getting like super bearish, they're thinking everything's gonna crash, then Powell's gonna come out and say, inflation's getting hot. We're gonna think about stopping rate hikes. We're gonna pause, et cetera, et cetera. In reality, it's the same thing that Bernanke said, or was it Bernanke? I don't know. Somebody said like 5 years ago, which is like the Fed is 98% talk and 2% action. I think that's like exactly what we've seen for the past 2 years, is basically like none of the actions that they've done have mattered all that much. It's just like as soon as people start worrying or start piling into a specific trade, then they start talking to like shift the psychology.
I'm not quite sure I see this. Sorry, go ahead.
No, just one simple thing. Like you had the 25 bips, so we were like 80 plus percent we were going to be 25 bips, and then that news comes out. Okay, it's equal, right? It's not less. It's not as a 0% hike. So they're still hiking, and then he comes out 30 minutes later on the podium, and then he says something completely different, and he always changes wording. But then at the same time, the SEC decides to sue Justin Sun and TRX all within 30 minutes. Like, it's
Well,
like,
that
come on,
was a
guys, you couldn't.
timely post. That already happened. If you read into that, a majority of those people already settled with the SEC. So these are not like new
Amazing.
charges. This is just
including
an
Justin Sun.
oddly very timely. I'm not sure. It did not specify who out of that group actually settled and what they settled for, what amounts. But it did say that they did. There was a majority of them that did. And so I think that was more of a very timely plug of a news statement
Yeah,
that wasn't
it's exactly like
necessarily
what I'm
real
saying.
time.
It's essentially the market was getting too hot. Everyone was funneling into crypto on the idea that, the banks had just printed a shitload of money. And so the idea is, the Fed needs to come out on FOMC and say, well, like what you think is going to happen is not going to happen. And they need to do everything they can to, put out a confidence game that says, crypto's not going to run, the dollar's going to be fine, et cetera, et cetera. And that includes, slapping some fines on some of the biggest names in crypto so that they have to sell some and it forces some, opposite volatility.
I'm not sure I see this even as an event though today. I don't understand where a quarter point makes any difference in any scenario currently. I think the disappointment, if any, comes from this perspective of they were looking for additional action and additional liquidity measures that the Fed was going to take for regional banks, and they didn't get that. Now, that being said, I don't think that there is a massive issue for regional banks where there's going to be some massive contagion. I don't, the reality is just the problem stems from a fundamental level. Banks have to put their money somewhere, and if they're not using it, then they have to put it, say, in treasuries. And if interest rates go up on treasuries, well, depending on the maturity, they might have to redeem it at a loss, right? And so at this point, looking at the dot plot or just looking at just future projections of interest rates, they're not going to move from where they currently are in any significant manner. We're not going to 10 and we're probably not going to 2, right? And so if that's the case, then anyone who's survived at this point is likely not going to be stressed any further. There's general consensus on the FOMC team that the members that we're kind of near the top of the range for interest rates. Obviously that's subject to change, but to me, all of that just sounds like this is a contained problem, and the markets just sort of was looking for free money and didn't.
I think this is anything but contained. I think the Fed's job is a confidence game. So of course, just like they've done for the past week and the week and a half before all of the events of the last week and a half, they've been saying, just before SVB crashed, they said, we've looked at SVB, we've looked at their creditors, everything's fine, nothing's going to happen. 2 days later, everyone pulls their money and it crashes. And then they said, we've looked at the regional bank situation, we've looked at the global bank situation, everything's fine, nothing's going to happen. And then Credit Suisse crashes, and then they're forced to, change everything with the ECB, with the Fed, and start opening all of these dollar swap lines.
Credit Suisse has had problems for years.
Right. But my point is,
for a long time. So that's not
of course. But my point is that
this is just a straw that broke the camel's back.
Of course, but my point is that the Fed's job is to insert confidence into the economy, even especially at times like this when everyone's lost confidence because things are crashing and the system is breaking. So you can't trust anything that they've said at the FOMC meeting to be truthful, especially when the Fed told you, 5 years ago that the leader of the Fed said that 98% of what we do is talk and 2% is action. So if you take that at face value, then what is, basically what they're trying to do is shift the market through confidence and psychology, not through action. Just like you're saying, they're not going to do anything. They don't need to do anything if they can get everyone confident in the system.
We're in a fractional reserve system,
of course,
right? So fractional reserve systems always will have a fear of a bank run. That never dissipates. It's never gone. That is always there. The question is, how much is it going to take to cause that run on the banks? And there's different levels of sensitivity to that issue. And my point is, at this given point, given the spectrum of risks to run on the bank, the most immediate risks have already happened, right? And so like the next tier of risks are not there because there's nothing to push it even further. I don't see.
Wait, but there's another bank that failed
obviously things can
yesterday.
change. I'm not going to sit here and project on who are you referring
I don't
to?
remember the name, but they crashed from, it was FRC or something like that, the ticker. They crashed from like $80 to $10 on the stock market. Does anyone know what I'm talking about?
First
First
Republic.
Republic Capital. Okay,
First Republic.
so like, you know, the FOMS, sorry, the Fed's coming out, you know, 2 days ago in Congress. Janet Yellen is saying this is contained. There's nothing more is going to happen. We've put out dollar swap lines. Everything is fine. Yet banks crash the day after. The point is it's not contained, and the reason that it's not contained is the reason that it started from the first place is, you know, all of these banks funneled into short-term, long-term treasuries. I guess you could say 10 years long-term now, with rates that are at like 1.25%. And they're holding those treasuries now in the scale of the tens of billions of dollars that are backing their users' deposits. The problem is those treasuries have gone down in value significantly because the rate of those current treasuries is 4.5% or 4.25, but they're only earning 1.5. And the thing about those treasuries is, you know, depending on the rate, you can get a lot more leverage on them. So they're getting screwed right now, and they're losing tons and tons of capital. And by the way, you know, all of the people that invest in these banks, all of the people that short these things, Stan Druckenmiller, et cetera, have come out since November 2022 saying, you know, this is nasty. These banks hold so many underwater securities that if the Fed doesn't do something, we're going to have a very bad time in 2023. You know, less than 6 months later, it's all coming to fruition exactly as Stan Druckenmiller and the others said it would. And for the reasons that they said it would. Essentially, these banks don't have the money to cover the deposits, and people need money. So as these companies take out, you know, dollars from the banks to cover their expenses, you know, as was done in all of these Silicon Valley companies that needed money over this downturn, then what happens is the banks really don't have the money to cover it. They can't sell those securities unless they're willing to sell them at a loss, and their creditors have to take that loss. So unless they're willing to take billions in dollars of losses, they just can't make their depositors whole. And so I think it's a much bigger problem than the Fed is willing to admit. And so they're never going to come out on FOMC and say, oh yeah, like 337 of the banks, the regional banks are at risk of failing, even though that was said by the banking sector like 2 days ago. So you have to realize like everything about the Fed is a confidence game. And right now, like it's maximum psyops.
Yeah, so I think in a way both of you guys are right, in the sense that simultaneously everything is fine and everything is not fine, and of course we don't know like the extent to which these banks are actually fine or not. What we do know is that they do have a huge amount of unrealized losses. Some of them have unrealized losses that are so big that basically their equity is either zero or negative if we take into account these unrealized losses. So if they were forced to sell these assets at a loss, they would theoretically wipe out their equity capital by doing that. But then, of course, this bank run didn't really happen so far in a wide, industry-wide. So we had some bank runs on some banks, and money is kind of shifting towards the big banks. By the way, the big banks also have a huge amount of unrealized losses, but they still theoretically still have a pretty solid equity capital, even after taking into account these unrealized losses. So I think basically the question is the market going to call the Fed bluff that everything is fine? So the Fed is saying everything is fine. Some, like a small number of banks, have some issues that are very big. But of course, if the market doesn't go see the cards of the Fed by actually triggering this bank run, then everything is really fine. Because if there is no bank run, like literally the system keeps functioning as it was. So we can debate, I think, how likely it is that this bank run industry-wide occurs. And we can put different probabilities to this. it's definitely possible. And if it happens, it can be really fast. And I think the point that also Balaji is making is that these bank runs in this age can actually happen in one day, because money moves at the speeds that's that was never possible in the past. So yeah, I mean, in all this, Bitcoin basically behaved like a risk-off asset as a hedge against the failure of the financial system over the next few weeks, couple of weeks, I would say. Now that the Fed is widely downplaying this situation, they're saying everything is fine. This problem is just involving a small amount of banks. Then, of course, I think it's right that Bitcoin just gets sold on this news.
I
Yeah, it's a little weird with the Fed, right? They just like, like there's just the carrot in front of the rabbit, right? They just keep moving it just a little more, and then people just follow like, oh, the next FOMC, oh, the next CPI. It's the biggest day. It's like, well, if you think like Bitcoin's going up, wouldn't have you have bought it in January? Wouldn't you have bought it 2 weeks ago, right before a 35% pump in a week? Like everybody tries to time and play these meetings, and unless you have some sort of, algo or news reading algo, then you're screwed if you're just sitting there clicking buttons, I think. The thing that, back to the bank run, the only thing that I see is people pulling money from these smaller banks and just moving to the big four, right? Just something easy. It's not every day all at once. It's just a slow move over, and more people making sure that their money is insured for 250K, right? FDIC insured, and not just like the whole thing with Silicon Valley Bank is they had money market accounts with BlackRock, and all of these customers thought that they had money market accounts in their name at BlackRock. So if shit hit the fan, stuff hit the fan, they could call BlackRock, hey, I need my money. Well, that wasn't the case. Silicon Valley Bank ended up putting these money market accounts in their name with customer monies, which sounds like a whole regulatory like issue that needs to be solved on the back end.
Yeah, I agree with that. I also want to, chime in and say I don't think like the risk to the economy is really a bank run per se. I think realistically, if you go back and listen to the CNBC interview with Druckenmiller in November of 2022, he basically says like I'd be stunned if a recession didn't happen in 2023, and he goes into his explanations of why and what this would lead to. I encourage everyone to listen to it, but the idea is like if we do have a recession, which we're starting to have, China food prices are coming down, U.S. food prices are coming down, oil prices are coming down globally. If we do have a recession, it means like the money that people need to pull out of their banks isn't there to pull out. And that's when you have some sort of actual crisis. It's not that people are like worried about some banking crisis and so they go to pull out of their money out of the bank and move it to a bigger bank. That causes a run on the banks. The problem is more so, the further we go into a recession, the less money people have and the more money they're trying to draw from to cover their expenses because they're earning less. And if the banks are still held in long-term treasuries for the next 10 years, which they are, that are earning 3% lower than the nominal rate, then they can't sell those treasuries. They can't make their depositors whole. And the realistic only way for the economy to be saved is for the Fed to institute some new monetary policy, increase swap lines, et cetera, something similar to March 2020, which I think this is the very clear reason why Bitcoin ran and why people funneled in at this toppy moment. But if those people are right, then it would be, far from a top. So I don't think it's like a terrible bet that these people have been making, but maybe it's not the bet that you guys think that they're making, right? Maybe they don't care if they lose $2,000 because they're betting on a $1 million Bitcoin price and they're putting such small amounts
Froggy,
of
let me ask you a
capital. Yep.
question. Let me ask a simple question. Assume that a bank has not done anything nefarious or illegal. And
That's a bad
assume
assumption.
that they run into a liquidity.
Well, that's hard. Yeah, that's hard.
Well, because first off, I'm pretty sure the Fed is only helping banks that are have legitimate books. If they have issues,
they're helping
like
friends,
what
I
you're
think.
mentioning about using, well, if they're using customer funds inappropriately, that's an issue.
They helped
But let's
SVB
just say
though.
that it's just let's just say it's a classic run on the bank, and it's due primarily to Fed interest rates or just the balance sheet of treasuries that apparently mark to market is not helpful for them, right? Do you think that the Fed would not backstop consumer deposits? Because in my opinion, there's literally no way the Fed will allow depositors to lose funds if the bank itself did not do anything nefarious. Now, if they did anything nefarious, I think it's a whole other story. But I'm not, I've gone through the financial crisis, and I remember constantly every day for many years thinking, I don't even know how this is sustainable. I don't know how this is sustainable. This is going to blow up tomorrow. And that conversation of like talking like Drunken Miller, I've listened to him for many, many years. And it's the same like doom and gloom stories that people will pump out year
Wait,
after
but he was
year
right.
after year, and we're still here. I'm not saying that people aren't necessarily right about a situation of stress, but what exactly transpired from 2008 to now? I would suggest a raging bull market.
Right. Nobody's saying.
All companies that were stressed,
I don't think we're
like
saying that
companies
there's
like
not going to be a bull
disappeared,
market in the
right?
future. I think we're actually saying that there is. The point is that, like this is not contained, and so the Fed is going to have to take extraordinary measures to contain this, which means, of course, we're going to have some period similar to 28 to 2020 where there's just so many dollars that have flooded into the global market. You're going to have a 20-year like raise in every single market that you look at. But that doesn't mean that that they've contained the problem or that the system works or that there isn't a reason to move to Bitcoin. And I think the more times their system continually fails, the more times they have to, devalue, all of the growing market currencies, emerging markets, the more those markets are going to say, like, this is stupid. Why are we still using the US dollar when, like we could literally do what El Salvador is doing? We'd lose less of our purchasing power per year, and we'd actually maintain more power against our enemies. It makes no sense to continue to do what they're doing when there is an alternative. So, the more
on a sector basis, that's true. Like from the crypto, because the banks that we're referring to are more tech oriented, right, and crypto oriented. So those people are the most likely to have alternative banking directly through crypto instead, right? On-chain wallets and whatnot. The mainstream, I don't think is going to buy in. Like, I don't think there's anything happening right now for the mainstream to go, I'm taking my money out of UBS and buying Bitcoin. That doesn't sound to
you
me
remember
like what's
GameStop
happening.
though, right?
Sounds like people who are already in.
Yeah,
Sure.
so I think
And all those. What
situations
about?
like this that
Yeah.
hit the mainstream, now every single person that cares about stocks or the economy is talking about this. So to think that wouldn't cause.
Even my grandma, my
Yeah, exactly.
80-year-old
My
grandma,
mom is
is
talking
talking
about it, and
about
my
this.
mom, like, she doesn't even hold a stock. She's never held a stock in her life. And the point is, like, everyone's talking about this, and the narrative is that the U.S. just printed so many dollars that risk assets, and specifically inflation-resistant assets, which is the narrative for Bitcoin, are going to go up from it. So to think that retail is not going to pile in is kind of ignoring the 35% gain from the last week. We've seen it, right? Especially to see them get dumped on FOMC makes it very clear who was buying then. But I wouldn't say it's something that we should ignore. It's just something that, like, as more time passes, as more of these Fed failures happen, the more legitimacy that goes to Bitcoin and other alternatives, the less chance the Fed has to continue to do what they're doing, the more confidence they have to put into the market when things fail, and the more chance there's this move to an alternative.
But is Bitcoin the standard, right? That's the question. And I don't think that we're even there yet. We're so
Right.
early before Bitcoin becomes the payment rail for the world, right? Maybe the US is peaked and is on its way out. US dollar is on its way out.
Right. Do you think that's why
Brazil and
XRP pumped
Argentina are doing their own.
yesterday, like 30%?
Dude, XRP, the standard, dude. dude, XRP, the standard. Palau is working with XRP to make their own stable coin.
Right.
I mean, it's XRP's back.
There's lots
dude.
of things that are working with the XRP standard, but the point there is like XRP standard doesn't use the XRP coin and doesn't funnel any returns back to the XRP coin. So it's just like a branding effort for the coin.
But nobody knows that. Nobody knows that besides
Okay,
us.
so do you think that
Yeah,
that's the reason it's
RippleNet is
ripping?
100% different than XRP coin. Oh, didn't you see like 10% in one
No,
day?
I think it was
right?
30%.
That was like yesterday
I think it was 30% in one day, and then today it's down 15%. So I would say that people were piling into this. What if XRP is the alternative? And then to go back to a previous point, like I think a lot of the players that would entertain this sort of idea, if they have large amounts of capital, they could throw in a few million. It would mean almost nothing to them if it went to zero. But if it 1,000x or 100x, they'd be set for life and they could continue to do whatever they wanted. So I do think it's not a stupid bet if you realistically believe.
No, this is just like the Russian bet, right? If you were Russian oligarch or some, you have a bunch of assets all over the world and you didn't have any orange coin, you're totally screwed, right? Your access to banking rails was done. Your yacht was seized. Okay, but if you had 100 million in Bitcoin, I mean, whatever, a million in Bitcoin, let's say, okay, at least you can go on, vacation for a few months while this settles down, and at least you could live, right? You have some sort of hard money. Somebody's going to accept it. If it's an exchange, or if it's a peer-to-peer, if it's in a coffee shop, somebody would exchange it for cash at some point. So if you think that that's the play, like that all these rich people are going to move and are going to, hold on, there's a loud car passing the street neighborhood. If you think that that's the play, like these guys last week, you're buying low 8-figure spot buys. Okay, well, if they 10x, amazing, right? Greatest trader alive. If it goes to zero, we have more money.
Yeah, exactly.
Well, can I ask you guys this? Where do you see on the spectrum of risk on versus risk off crypto or Bitcoin, whichever one you want to kind of discuss, lies? Because I'm not quite
it's full risk on
any narrative of each. Yeah.
Crypto is just, especially Bitcoin.
But this entire conversation is that it's a risk off asset, right?
No, definitely not.
Of like the banks are risky then. Well, then if you're saying that the bank is provides more, like gold is a risk off asset, right?
Okay.
So and the narrative and idea that Bitcoin has some similar characteristics of that would basically then tell you that, all right, well then it also has risk off characteristics. But then we also know it trades very much when it wants to like a risk on asset and just follows equity.
It's much too early to be a risk off asset. I think the argument about it is that it might one day become, the risk off asset that replaces gold or dollars. But today, it's clear as day, it acts as, the most traditional risk on asset that you can look at. When risk on is in the market, crypto's.
We talked about this last week. A 70 vol product is not a risk off.
Right.
We had this discussion like last week or a couple of weeks ago, Marty, where we talked about like ETH potentially being like a 20 vol product or less. Right. And
would you trade it? The answer was no.
Yeah. I mean, it's a whole different ball game at that point, but then it starts hitting the narratives that I think that people want. So it's like, what do you guys want? Right. Like, all right, we want a product that we can trade and make money, but we also want it to be a safe haven. Well, you can't have both. You can't have a 70
I think you're hitting the nail on the head. It's right. It's Bitcoin is the narrative asset, right? It's whatever is like vogue right now in like anti-macro or like the macro economy of anti-establishment. That is exactly what Bitcoin is going to take on. So if at the time, the Fed is printing a shitload of money, people are going to say, oh yeah, it's a risk on asset. It's going to eat all of those dollars and it's going to run. But if all of the risk is leaving the market and things are slowing down and people are, like Bitcoin's dropping, people are going to start saying, oh no, it's a risk off asset. It's a store of value. It's something that holds value for hundreds of years. You can't ever print any more of it. So it'll hold my value more than the dollar in my bank account. Right.
So it's basically
Sailor comes back out. Sailor
it's a narrative asset,
it's
right?
It's a con game. It's like the Fed. It's the Fed. It's the same as the.
Well, if you want to get into that,
because you're basically saying it's narrative driven, right?
All right. If you want to really get into that,
I'm just saying, like through association.
Think about this. let's say like the dollar or the United States government or say some intelligence agency like maybe the NSA, right? They understood that the dollar was entering this period where like you can't just keep printing when everyone knows that the gig is up, and at some point you have to move to a new system. How would you ensure that like you were the gatekeepers of that system, or you were the controllers of that system, or at least like your citizenry, right? I think what you could do, right, is put out a coin and kind of say it's anti-government, do all these things and say it's gonna replace the dollar, get everybody that hates the dollar to kind of support this, but then make sure that the United States has majority control over both the development of it as well as the mining of it and the actual holding of the currency. And so if you look at what's happened over the past few years, at first, in the first few years of Bitcoin, the United States government very much denounced it, said this is stupid, this is a scam, this is just people trying to steal your money to buy drugs, right? But since then, we've seen the United States become one of the largest holders of Bitcoin, if not the largest holder of Bitcoin in the last 2 years.
Seized
Of course.
Bitcoin. I think we
Of
should
course, yeah,
quote
it's
that.
seized Bitcoin, but they have become the
course.
largest holder. And so, like, regardless of how they get it, it's there is this possibility that like they see what's happening, or they saw what's happening, the writing is on the wall, and they're participating just as much as everyone else. And, if everyone's getting over this Fed game, well, maybe they need a new game that they can run similarly, using similar tactics, right? Or something that they could perhaps use their power in the existing financial system, maybe something that they could print at will and put value into their new system, of which they own the majority of the development in, the majority of the coins in, and the majority of the the mining. I mean, it's just a conspiracy theory, right?
Oh, thank you for joining into Premia conspiracy theories.
Right. But not like the point is like it would be silly to think that like Bitcoin has no chance because the United States government is giving it a chance. If it had no chance, they wouldn't be seizing it. They wouldn't be setting up regulations against it. The Chinese government wouldn't be blocking it. All of these proponents of CBDC wouldn't have any problem with it. But they do. But they're still acquiring it. They're still supporting the development of it. They're still supporting the mining of it.
You can't allocate, right? Yeah, you can't have your whole I guess you could, but I know a few people like this, but their whole life is denominated in Bitcoin. They literally do peer-to-peer. They do the crypto debit card. It's like, Jesus Christ, don't you want a platinum Amex? Yeah. Don't you want to live a little bit? Like, you need a percentage. No, not financial advice. You need a percentage of your portfolio in cold storage just in case shit hits the fan and there's nothing else, or this is there's only 21 million coins and everything's paid for in sats now, and we're in that movie with Justin Timberlake Time or whatever, right? Like, just in case, you should probably hold something that governments are trying to ban and, like you said, put regulation on and things like that.
Marty, just like you said, like, I think we should be careful what we are wishing for, because if it does become a monetary system overnight, for that to have happened, there would have had to been cataclysmic situations from a government level, from a monetary standpoint, where a massive collapse would have happened, and that's not a good thing. I don't know if
you have bigger issues. You have bigger issues if the U.S. dollar becomes
Argentinian
peso.
Exactly. I'm not sure anyone really wants to wish that, to get to that point in any immediate
Of course
fashion,
not. But do you think the Romans wished to get there? Of course not. But like, they knew when they were close, when they were turning all of their metal coins into coins backed by shittier metals, right? Like, at some point, the powers that be that control the current currency understand, oh shit, we didn't run this correctly. We need to start putting fake money into this real money. Otherwise, people are going to realize we can't pay their debts. And as soon as that happens, as soon as they realize the gig is up, you better bet they're looking for what's the next gig, right? They're not going to be like, well, shit, all right, we know the Roman currency is going to zero. Let's just give up, right? Let's just, hand all of our weapons over. Let's just die. Of course they're not going to do that. They're going to say, okay, how can we, funnel our power in this, currency in this system into the next system? And what you're going to do is you're going to look for what is the next system, what could possibly replace this, and you'd probably attack your enemies and support the ones that you like. So in that case, you'd probably
Well,
wait.
Froggy,
You'd
the
probably
one
like
thing
go to
there.
war with.
What about
Guys,
something in the
guys, I
middle?
gotta run
Okay.
off. I gotta run off.
Hey, it was good talking to you, Marty.
I love you guys. I'll
Yeah.
talk to you guys.
All
All right,
right.
we'll be back
See
2
you, Marty.
weeks.
Always.
Peace out. Thank you, guys.
But what I was saying is, if the only
And
alternatives,
some more conspiracy series, okay?
it's,
Ciao.
it's just conspiracy, no theory. So if the only alternative to the US dollar is either Bitcoin or BRICS, then what you would likely see is the United States going to war against, like Russia, China, and then, supporting the one thing that they have the chance of having power over, which is, Bitcoin, which they're acquiring en masse.
100%. It's a power
Right.
game. It's about retaining the power of the dollar, and that will always be true because that's the U.S.'s position that they've always maintained, and that's the leverage that they have on the global economy, right? And so, but I don't know if it's going to. I don't know if we necessarily have to have a collapse on a global level. Just the dollar weakening to some degree to a point at which Bitcoin or crypto in general becomes a viable alternative, which is kind of people are nibbling at this system design as an alternative to using dollars that all flow through a centralized process, via the U.S. It's a threat to the U.S. Not necessarily that U.S. is going to fail, right? I don't know if this is like as extreme as say like what you mentioned with like the Roman Empire collapsing. I think this could just be a very slow death that we turn around and we look back in our 60s and just somehow it happened, but it took 40 years.
Well, I'm not
right,
actually
to transpire.
suggesting that the United States empire is going to fail. The example that I shared about Rome was about their currency and about how when shit hits the fan, the people that print the currency know very, very well that they're reaching their last days because instead of putting 100% gold and silver into the coins, they're starting to put bronze and tin and copper and zinc into these things to kind of just make them way more and fill up the same volume, even though everyone knows they're not worth the same amount nominally, right? And so I think the idea here, like, is not that the like the United States empire is just going to crash, but that the United States, if they were worth anything, they would be looking at alternatives when they realize that their system is coming down, and it's very clear that they are, right? And so I think the point is like perhaps at some point we've done this multiple times in the past where we've gone off the gold standard, then gone back on the gold standard, etc. So perhaps what the United States government could do in the future is, they're acquiring enough Bitcoin to where they could legitimately back the United States dollar by Bitcoin in the case that the rest of the world decides that they want to put Bitcoin as their reserve currency. And in that case, the United States dollar remains dominant, keeps its hegemony, and the United States keeps all of its power. They don't have to change anything. They just have to, put some rules back into their banking ledger that says, okay, we're going to back these things with Bitcoin instead of gold once again.
Cool.
Mic dropped by Froggy.
I've been shit posting about Froggy in the Discord.
Oh dear, can't wait to see it.
We're just over the hour mark. Tempest, Tolga, any final thoughts, comments on the market before we sign off for the evening?
I mean, it's entertaining for sure. I'm sure there's going to be some more bumps and bruises along the way. I think it's probably not doom and gloom, and it's probably not complete risk on either. I think we're just going to be somewhere in between in varying degrees for a while, and we'll see what happens.
All I'll say is it's going to be an interesting next few weeks and potentially next few months, depending on how this is handled. I nowhere think that this is contained. I think like we've still got a lot to see of how this unfolds, but I don't think that like there is any specific direction that is set in stone. things are so dynamic with how things move globally right now. How like a change in wording by the Fed can shift like the bond prices globally, et cetera. So I do think it's going to be an interesting few months ahead, but I don't think anybody really knows where we're headed.
Awesome. All right, so let's wrap it up. Tempest, do you want to share your team's social contacts in case someone isn't following you guys, so they can learn more?
Yeah, absolutely. So you can follow us at Smilee Finance. So Smilee with 2 E's, Finance.
Awesome.
Yep, thanks for joining us, everyone. Be on the lookout for Smilee Finance on Arbitrum coming soon. We'll see you in 2 weeks for our next options talk with Marty.
Absolutely. Thank you, guys. Very interesting chat.
Thanks for joining, everybody. Thanks for listening.
Bye.
Likewise. Have a good one.
Ciao.
Bye.